Hello traders, welcome back to the channel. This is Jonoy with Trading the Charts Pro, and guys, in this video we're going to break down the overall market and come up with our game plan based on where we see the market going into this upcoming week. All right, so stay tuned. We're going to break it down right here right now. Okay guys, here we're gonna start off this session or this video a little bit different. We're gonna start off with the VIX, and why the VIX is very important this week is because we've seen last week where the VIX had spiked up. Oh, let me clean this up. The VIX had spiked up just a little bit, right? Okay, so we have seen where the VIX had spiked up, and then the market had pulled back roughly into the 50 EMA, and from there a lot of stocks had pulled back to their 50 EMA, such as Twilio, Fiverr, a lot of great companies, man. It was a significant time or opportunity to get in on some of those swing trades. However, we've seen that now the VIX has settled down, guys, and look, on Friday it almost looks like the VIX finally wants to break down below the $20 level. If it breaks the $20 level, guys, we're looking for the VIX to drop back down here into the $11 area. That's around a 9-point drop. Why does this matter? Because if you know what the VIX mean, this is the fear index, stuff like that. It also move inverse of the market. So if the VIX finally, after so many months, starting in March 2020, when the VIX spiked up and went crazy, after so many months of gradually settling down, the VIX finally looks like it is going to break back down and come back down to the low levels that it was before the spike. Why is this important? This is important because when we move on over to the overall market, which is like the ES futures, E-mini, S&P 500, guys, I was looking at the market and I'm like, well, this market is high, but seeing this activity inside the VIX, guys, this means that the market is about to blow out and go much higher. Yes, my target for ES was 4,000, so that's somewhere up here. We still need around 100, roughly 100 points to get there. That's the target. That's where I see the market going from this level. We need around 75 to 100 points to get back to 400. So guys, I'm extremely bullish. When we look on the ES, we're holding this very nice uptrend. Worst case scenario is, given that we head back here into this resistance level, worst case scenario, we pull back down into the support of the 10 and the 20 EMA, and then from that level we bounce and we continue up in this uptrend, right? This is what I see going forward. So I'm still bullish, I'm still long, and I'm still looking to buy the dips as this market pulls back and continue running higher, because though it is high, guys, we are going higher. All right, so just buckle up and keep riding it to the upside. We're gonna jump into NQ, see what is the NQ telling us. Last week when we looked at this, we said we're looking for NQ to break out and make a new high. Guys, we did break out, we made a new high, and we're continuing to push higher. So what is going to be interesting with NQ into this upcoming week, do we break above this uptrending resistance and push up and continue to move higher to the upside? Yes, that's what I'm looking for, but in the short term we still have to be cautious that we get a potential pullback, bearish case into the 10 and the 20 EMA, and then from there we bounce up to the upside. Bullish case, we break out of this uptrending resistance level and then the market just continue to move parabolic to the upside. All right. When we look at YM, which YM was showing us some very interesting action last week in the last session that we had, and we said, hey guys, after seeing the market hit a double top here and sell off, pulling back roughly or right into the 50 EMA and then bounce, and we came back to test the very same resistance, but due to how the momentum was strong, we said we're looking to see the market break above that resistance and make a new high. Well, it's here, guys. It's official. The market has broken above that level, and now we're kind of like not sure where we want to go. But based on Friday's close, you know, this is a candlestick right here that, let me zoom in just a little bit. This candlestick is just telling us that, hey, at first the market opened right at this level. We eventually sold off sometime throughout the day, came down, made the low, but before the day was over, buyers came in and pushed the market higher, and we closed a bit higher. So what I'm going to be looking for when the market opens, as far as Dow, YM, you know, futures, I'm looking to see, can the market break out above this level right here? Okay, because technically this pattern here is just looking like a bull flag to the upside, and if we're able to break out, which I don't see any reason why we won't, then I'm looking for this thing to, you know, pop up here. What is the target? I'm looking to see, can this thing come and make a absolute new high all the way up here. 32,000 is going to be the new target. We're already, you know, at pretty much halfway that level. We're at 31,400. Can the market run up another 600 points and make another new high? That's what I'm looking for. That's the target as far as the bullish case. As far as the bearish case for the Dow, guys, I do not have any bearish case for the Dow at this point, and the reason for that is what we've, you know, talked about first initially, is that we see the VIX dropping lower and lower. After this last spike, we pulled down, found the support, we tried to bounce twice, and right now this is 100% a bear flag here at support. And on Friday, with this price action, it looks like we're about to break the support at this $20 level, and if we break that level, the VIX is going to move more to the downside. What does that mean for the overall market? It means that the market is going to continue to push higher and higher and higher here into the short term until, you know, we get a catalyst that the market is going to pull back. What is that catalyst going to be or would look like? Well, my guess is that if we start to have some interest rate increasing, then that would cause the market to pull back a little bit, and then you'd have some investors starting to move over to bonds because interest rate, you know, started to move up. Then bonds earnings or bonds are going to start performing a little bit better. But based on what the Fed is saying, guys, we don't have any form of interest rate increase coming anytime soon. So stocks are the best thing right now. So we will continue to buy the dip. We'll continue to look for those stocks that hasn't, you know, make extremely highs or has make highs and pull back, you know, start giving us the opportunity to buy them at a 50-day moving average, 50 EMA or something like that. My three stocks, or there's one stock that I want to look at tonight and show you, hey, a potential opportunity that may be coming up here that you can be watching out for. All right, and guys, you know, we've been watching this one here very closely since the stock was right here, and this is CRM. We run up, then we pull back, we broke all the way down into the 200 SMA moving average, and from there we bounce, bull flag, break out of that bull flag, which that level was a all resistance right here. We popped out, and now we fill the gap right here at the $240 level. So what I'm looking for right around now is, can we break out of this current level at the 240, given that we'll fill the gap, and do we break out of this downtrend short term and come back up here into the 280s? That's what I'm looking for in terms of this stock right here. Why do I believe that this stock can run higher? Well, CRM, they're one of the leaders in cloud-based technology, and I'm seeing where so many other stocks are just pumping to the upside. So I know CRM has earnings on February 25th, so I'm looking to see, do we get a massive move pre-earnings, which is going to be in this upcoming week. If we don't get it in this upcoming week, then maybe the move, well, we have this week that's coming 4 days, and then we have 1, 2, 3 days into next week. So we have roughly 7 days to see, can this stock make a huge move before earnings and push us back either to 250 or break out and head up into the 260 in anticipation of a good earnings, just like all the other cloud stocks. HubSpot, for example, Twilio, for example, Workday, all of those stocks are pumping extremely high and higher. So I'm looking to see, okay, do we get the move here with this one? I am not a person that likes to hold over earnings, so I'm looking to close this position out maybe the day of earnings or a day before earnings, based on what the stock do. I may be out maybe a couple days before earnings, just based on what we see in the price action. So guys, I just wanted to break that one down and share my overall thoughts with the market and the market direction for you. So if you watch here till the end, thank you for watching, and I look forward to seeing you in the